Any sound now? Yeah. Are you chatting shit, Lex? Because, okay. It's because controller's plugged in. Alright, I'll start now anyway, because I can just upload this anyway as a video. So, actually, there's one thing that I have to go over for someone first. Let's go on a different chat. Okay, so someone asked me in the forum about this. This only take 2 seconds, and then I'll get onto the real thing that I want to share. Someone asked me regarding structure, which are your structure points? Is it these that I've just highlighted, or is it also these points in here? Like, are these also the structure points along with the blue ones? Oops. No. I think that's green, not blue. So, yeah, someone asked me which of the structure points do we class these as structure points, and basically it's just the green ones, because for these to be structure points, right, you'd have to, for something to be considered a lower high, which is this one, this one, and this one, price has to make a lower low. So for example, for this to be a structure point, price needs to come below this low right here. Same for this one. Price never made a lower low, so this can't be a lower high. So therefore, these in here will be, let's say our green is H4. These red ones will be H1 and 15 structure, which causes the pullback, which it looks bullish, but these are not your H4 structure points. These are lower time frames, so don't think, okay, now we're bullish on H4, we're still bearish. We have to break this previous low high before H4 is bullish. And obviously these can't be structure points, because to get a new lower high you have to create a lower low. So like, price never made that lower low, so this can't be considered a lower high, and that'll just be a low time frame structure. So yeah, that's just for someone. Alright, let's get on to the lesson now. Basically, this week's price action was pretty annoying, because I have to explain this next thing in order for you to understand it fully. And yeah, at first I was a bit hesitant about sharing this, but oh well, this will be the last thing I share, because it's pretty good in my opinion. But basically, I only trade EU, right? So let's say the left one is the dollar, because this will make more sense with this week, and the right one is EU, okay? So obviously everyone knows what an SMT divergence is, but when I want to talk about structure after SMT divergences, so typical structure will have, let's say price is trending a bit more than this, like so, and okay, so we've got clear bullish structure on the dollar and clear bearish structure on EU, right? These being our structure points, and then EU is obviously still bearish, yet to make that lower low, which means this can't be a structure point on EU, right? Because we didn't make that lower low. This can't be a lower high because we never made a lower low. So our structure point on EU is still here. Whereas, okay, this point on EU is this point on the dollar. Because if we look at, I'm going to explain this better in a minute, but basically the SMT divergence, right? Dollar made a high high, okay? EU failed to create a lower low. That is an SMT divergence, right? But when it comes to structure, dollar's structure has now changed, whereas EU failed to create that lower low. So this is not a structure point, whereas this point for dollar is a structure point, okay? this point here on the dollar is this point here on EU. This point is a structure point on the dollar. This point isn't a structure point on EU. So typically, like if you're just looking at EU, you won't observe this high as important regarding structure. You'll be focusing on this high. Whereas on the dollar, this low is important because now if we break this low, structure is bearish, okay? Whereas on EU, if you weren't looking at the dollar and you broke this high, it has no relevance regarding structure. This is the high that we have to break to cause the structure break, right? So what is the point I'm trying to make? Basically, when we have SMT divergences between dollar and EU, let me just check if my chart is still. Yeah, I'll actually only trade EU. When we get an SMT divergence between the dollar and EU, one pair out of dollar and EU will change structure, and this is really important. So when price, for example, trades lower into this PD rate on the dollar, this is obviously a relevant structural point, so potentially this could cause price to go higher, you know, classic structure or whatever. But on EU, it wouldn't make sense to sell from here structurally. But basically, this is the key thing right here. When there is an SMT divergence, one pair will have different structure, and essentially that structure slash PD array transfers to EU, okay? Oh, sorry, transfers to the other pair. Okay. It transfers to the other pair. So essentially, because dollar structure is bullish here, this is a relevant structure point on the dollar, this is not a relevant structure point on the EU, it's this structure point transfers to EU, so now this point becomes relevant, this PD array becomes relevant, and the PD array here becomes relevant. This PD array essentially could send price lower because dollar structure is different. This is like a relevant point on dollar, and I'm going to show you an example of this. I won't get rid of this just yet. I'll show you an example from this week. Okay, let's look here. Okay, so I'll explain why these are your H1 structure points in a minute, but just let's pretend you knew why these were your structure points. Structurally, H1 is bullish right here. Sorry, that's the wrong one. High high, high low, high high, high low, never broke this low. So essentially you'd expect price to come and take out this high. But why did price sell from, let's just mark out the whole thing, from this order block, for example? If we go over to the dollar, price made a lower low, and then it broke to the upside, okay? Whereas EU failed to, oh, that's the wrong one. EU failed to create a lower low. So now we have different structure points. Dollar structure is bullish, and EU structure is also bullish. This low here on the dollar is this high here on EU. So essentially the dollar made a structure break, which means now this PD array, which if we transferred to EU actually got tapped, which would be this one on EU, is relevant. It's relevant in price. This is because dollar structure, if this was the dollar chart, dollar would have made a lower low, retraced back up, and reacted off this PD array. Does that make sense? It's really hard for me to explain, but dollar structure is different to EU. Dollar structure is bullish, EU structure is also bullish. Okay? So, like, the point I'm trying to make is this PD array, this structural point, transfers into EU. It's an obstacle for EU essentially. EU is not guaranteed to make a new high now because dollar structure is different, and obviously dollar and EU are so correlated, like 98% or whatever. It could react off of dollar structure point essentially. Hopefully this is making sense. I don't know if it is, but yeah, I don't know how to explain it better. Like, let me just check the. Does that make sense? Does anyone like? Does that make sense to anyone? I don't really know. But anyway, let me think. How can I explain this? It might have been a good explanation. But if we go back to the drawing here, essentially, how do I? So if this goes lower, this goes higher. Let me look at EU. Give me a sec. Boom, boom. Is the drawing even right? I think it is. Yeah, so give me a sec. Okay, I'll try explain it one more time. So EU structure is bullish. We would expect EU to make a high-low and cause a new high-high, okay? But the reason price sold from here is because dollar broke the structure to the upside, whereas EU never broke to the downside, meaning dollar's relevant structure point is now bullish, and this zone in here can now cause a new high high, okay? So if we take that to EU, instead of EU making that high high, potentially if dollar and EU weren't inverted and they were the same, dollar would have made a lower low, making this a pullback into this zone here to sell off. So basically the dollar structure transfers over to EU, and that relevant structure point on dollar becomes a relevant point on EU that you have to observe. So within here you'd look for lower time frame, M15, M5 to confirm any sells. So if we go over to the dollar, when dollar made this H1 high low, you look for M15, M5, and obviously you had an M5 break your structure, pull back, and it ended up breaking the M15 obstacle, and obviously pull back to create a new high high. Hopefully that makes sense. And on H4, the reason this entire thing was an obstacle in my other video, this whole point here was an obstacle in EU. Typically, like I was explaining how these are my EU structure points, lower high to lower low. So this isn't really a relevant structure point because price never made a lower low, right? But if we go over to the dollar, dollar made a high low to high high to now another high low and a high high. So this zone in here is relevant for dollar. It's bullish. Price can make a high low and go on to make a high high. So if we transfer that over to EU, this zone in here becomes relevant now. So it's an obstacle because dollar could cause a new high high. So that transfers to EU lower low, if that makes sense. It just transfers. Dollar's structure transfers over to EU. Same if EU is the one making the lower low and dollar failed to create a high high, EU would transfer to the dollar. So basically the pair that makes the lower low slash will have different structure, and this structure will transfer to the other pair as an obstacle for that pair. Okay, so yeah, this is obviously an obstacle, and we can see why it's reacted so much. Because if we just look at EU alone, this high here is not relevant. It's not relevant in terms of structure on H4. It can't be a low high because price failed to create that low low. But when we look at the dollar, it tells us that the dollar made a high high. So now this zone in here becomes relevant, and yeah, that just transfers to EU. So I mean, yeah, it makes sense. I will explain Yeah, Lewis, I'll try to fix that for you, mate. Yeah, I'll explain structure on EU in a minute. Okay. But there's one more rule that regarding this that I have to explain. That is kind of new to me. Like literally this week, I kind of saw it for the first time. Well, kind of first time. So if we go back to this example here on the chart. Oops. I think it was at M15. Okay. So if we go back to this chart, only one time. Let's say this is H4. H4 structure will be different for dollar in EU. Every single time frame should have no SMT divergences and it should have the same structure. So the M5 structure points would be the same on EU as they are on dollar. Like there wouldn't be any, you wouldn't have to transfer any structure on other time frames, is essentially what I'm saying. Okay, this is a really shit explanation. If there is more than one time frame that has different structure, then all time frames will switch. Okay, please don't like quote me on this. This is just a new thing that I've observed this week, and I'm still making rules on this, but it's pretty legit and it's worked perfectly this week, and I'm going to explain it now. So I'm going to get rid of this because this you can just screenshot that or whatever. If there is more than one time frame that has different structure, then all time frame switch. Okay, so let's look at dollar. I said that H4 was different to EU's H4, which is true. Okay. EU's H1 structure. Okay, EU's H4 structure is here to here. Okay, whereas dollars is here to here, which would be here to here on EU, but it's not. So EU's H4 structure is different to the dollar's H4 structure, but EU's H1 structure was bullish like this, and then it switched bearish. Okay, but if we look at the dollar's H4 structure was here to here, and dollar's H1 structure was here to here. So now H1 has to, work internally within this range because two time frames can't have the same structure. I did explain this before. So, for example, if H4 structure is here to here, and also H1 structure is here to here, then H1 will work within the range like that or like that. Yeah. So now, because H4 and H1 are the same on dollar structure will work internally like this. See how structure is hoping for that, but so our H1 structure will go from here to here to here to here to here to here, and then to here. Now that is completely different to EU. EU's H1 structure for me was here, but then this week I saw it didn't really work out, and I tried to figure it out, and I realized that dollar structure has multiple time frames with different structure. H4 is different, now H1 is different, that means M15 is different, that means M5 is different, and M1 is different. So I looked at my charts and I realized that if I transfer every single time frame structure from H4 and below to EU and use dollars, so this is dollars H1 structure here, and use that on EU, it also worked very well. Price reacted from this H1 structure on the dollar, as obviously I've explained that before, and I'll show you now. So basically the point I'm trying to make here is, if we have multiple time frames that have different structure, then all structure transfers to the other pair. So multiple time frames on the dollar would have different structure to EU, which means I'm going to transfer all of dollar structure over to EU and start using it like that. So now instead of my EU structure being here to here, I'm just copying it from the dollar now. So it's here to here. We had that bullish breaker structure, high, this failed to create a high because I've already explained this was an obstacle. So we had a bearish breaker structure, and obviously yesterday I was actually anticipating sells from within here to go lower, but price completely just fucking disrespected that and turned back to bullish. So now my structure points from here to here, made a high low, and we had confirmation, so it should come up here, right? And obviously, let me explain M15. So we've outlined that this is our H1, high high to high low to high high, and again our M15 was. Why is this not your structure point? Because price never made a high high, so this can't be a high low to high high, which is the exact same as our H1, which again can't happen. You can't have two time frames of the same structure, so the time frame below that will start working internally. Okay, which makes perfect sense. We had previous day's high taken, we had an M15 breaker structure, pulls back and retraces on H1 into H1 discount, we're at bought again, and then yeah, I know it's not going to be explained well, but you're going to have to probably watch it like 3 times to fully understand it. But if you get the main point of, for example, if you get the main point, like, if there's one time frame that's different, great, don't transfer every single time frame across. It's just going to be one time frame that has an obstacle. But if there's multiple time frames that are different, then you're going to transfer all the time frames over, if that makes sense. And the reason this is so relevant is because this week, in the previous video, I outlined that I wanted to work with M15 structure all the way up to this high. But obviously, you can see that M15 structure, it didn't really make sense because M5 structure was messy in here. It wasn't clean at all. And I realized that price is not respecting EU structure, it's using dollar structure. So, if we were using this as just M15 structure, well, M15 made a high low to high high, this would not be M15 structure because we wouldn't know the, like, let's say we weren't using H1 structure as the dollars, right? And we're just using M15. Well, M15 made a high low, a high high, high low, high high, high low, high high. If we go to M5 now and use this as our M5 structure, which is, it's not by the way, it's M15, break a structure, clean, break structure, clean, pullback. This doesn't make sense. And none of it makes sense. Well, this is not even a break structure because it's actually here. So none of this price actually makes sense on M5. It's because I was using the wrong time frame, and EU is referring to the dollar. So yeah, hopefully just try and watch it like 3 times because I know this is going to be a shit explanation, but it's because it's new to me. It doesn't really like make that much sense. I understand, but can you understand? I don't look at EuroGBP because it's just useless to me in the way I trade. It has no relevance in my trading. I don't look at GU. It just doesn't have any relevance to EU structure or dollar structure in my opinion. If you could explain how not to get lost on smaller time frames. Basically, the key is understand every time frame structure. If you understand H1 structure, for example, now we can understand M15 structure, which would be okay. And once you figured out M15 structure, within the M15 structure you can now play M5 structure, which is not visible right now, but from here to here it was the exact same. So M5 would have to work like so, and it just consolidated. Basically, the key is to understand each time frame structure. Basically, if you've got range structure from here to here, you're going to be using control structure within this, and then you've got control structure from here to here, for example, you're going to be using the one below control within these ranges. You've just got to be aware of every single time frame structure. You're obviously not going to use M1 structure if H4 is just made oops, what the fuck? A higher high. You're not going to be using M1 structure. You're ideally going to be using H1 structure or M15 structure. It's just, the key is understand every single time frame structure. Understand if you've just made a H4 higher high, you're going to be observing H1, M15. You're not going to be using M1. That's got no relevance right there. It just depends what time frame you're kind of working with. So if we go back here, H1 breaker structure, H1 high low, I know my relevant timeframes are M15, M5 potentially. It's not going to be M1, it's not going to be 30 seconds, it's going to be M15 and M5 because I'm working with H1 structure. Again, H1 high high, I'm going to be working with M15 and M5, and I went over this in the last video. You just got to be aware of what time frame structure you're working with. So for example, if we're now working with M15 structure, M15 breaker structure, we're going to be looking at M5, M1. Once we get above this high, I'm not looking at M1 anymore. I'm focusing on, well, okay, that's wrong actually. Okay, how do I explain this? Kind of map your time frames out, and with the logic that I used in the last video. So let's say your M15, you want to have your target. Let's say your target was H1 and your entry was M15/M5. When H1 makes a high high or a high low, you're going to be looking at M15 and M5 structure. When M15 makes a high high or high low, you're going to be looking at M5, M1. If H4 makes a high high or high low, you're going to be looking at H1, M15. If daily makes a high high or high low, you're going to be looking at H4, H1. And yeah, just use it like that. Just understand where you are in price right now. So for example, right now, in my eyes, we've had a H1 high low, because our H1 was from here, it was bearish at this point, and now broke bullish, so H1 structure is here. M15 was, yesterday it was here, we had a bullish breaker structure, high low, high high, high low, and obviously a high high. That's retraced now, so we're in M15 discount. Let's look at M5. M5, we had lower low, lower high, lower low, lower high, lower low, breaker structure, liquidity feeding in, easy buy this morning. And now we're just playing M5 structure, sorry, all the way essentially to this high up here, because we had a confirmation. And now I'm working with essentially M1 and M5 structure, because when M5 retraces, I can look for M1 confirmations. When M5 makes a high high, I can look for M1 distribution to trade the pullback, essentially, you know, etc., etc. It's just understanding where you are in price right now. I'm not going to be looking at M15 structure here, because M15 structure is all the way back here to here. And when price trades above here, we've now made a H1 high high. I'm probably not going to be looking at M1. I'm probably going to be looking at M15 and M5, because I know that I'm in a H1 high high, for example. Just about understanding where your timeframes are regarding structure, and which timeframes are going to be used with that specific structural point, if that makes sense. So yeah, but I will explain essentially this whole week's price action, because people were asking questions about structure points and they were using M15 as this to this, which is right from what I taught you so far, but now you know it's obviously wrong because we transfer the dollar structure. So once we had that H1 break, we understood that our M15 structure and H1 structure was exactly the same. So now we know that M15 needs to change, and M15 is going to either work internally like this, or it's going to come down and work internally like this. And as we can see, it worked internally like so, okay? Now, let me just do that. We had a breaker structure after taking out previous day's high. And also, this is what I was trying to, which I didn't understand yesterday because I didn't really understand the structure points, but now it makes perfect sense to me. We were in, keep in mind, we're still in dollar's obstacle on H4. Dollar made that high high, so this is a relevant point in price that could potentially sell off. So on H1 now, we had a sweep on key liquidity as a potential reversal pattern. So this sell in here, like I expected these equal lows to get taken. It was crazy that they didn't. Pure engineering of liquidity and absolutely fucked everyone up, including Lewis. But yeah, after this M15 break structure, this confirms H1 retracement at the least. Ideally, you know, we'd like these equal lows to get taken, but again, structure over liquidity. It's not confirmed because H1 structure is bullish. M15 break structure only means H1 retracement. I'd like it to take these equal lows, but it's not confirmed, which is why price bought from here. And obviously you can just play M15 structure within this. This was an inducement rather than a break structure in real time. The only way of determining this is determining where is your drawing liquidity. Has H1 retraced fully yet? Is H1 going to go for these lows? Or is H1 retraced to the ideal levels and now can it buy? That's what you have to determine. And obviously it was pretty hard yesterday, but yeah, it was a sticky one. So I didn't do anything yesterday because my structure points did not make sense to me at all. So I just didn't trade. But yeah, apart from in the morning when it was in here, but after it traded above the side, it didn't make sense to me. So I can't say what I was thinking in real time. But after the fact, we can clearly see this as inducement rather than break structure. And yeah, so dollar made that high, which means this now is a relevant obstacle on EU. It's not confirmed to make a high because dollar made that low essentially, or high, and now this is a relevant structure point on dollar. It transfers to EU. So we're looking for that M15 and M5 confirmation. We know that M15 and M5 confirmation is what we're looking for. Our M15 structure is here. We broke to the upside. But if you look at the dollar, oh, why the fuck is that so big? The dollar did not break to the downside, so we had an SMT divergence on M15, and after the SMT divergence, which is a form of distribution by the way, in that H1 PY, in this dollar's H1, this is H1 structure, when it pulled back and made a high-low, we had M15 SMT divergence, which is a form of confirmation, form of accumulation, and we had that M5 breaker structure as the confirmation, and obviously price now sold to make a low, and once it made that low, I think that was previous day's low, so we can expect some sort of pullback. M15 broke to the upside, high-low, and obviously I would have taken majority of volume off of here because I expected price to sell off, but yeah, that was that, but it broke to the upside. And now today our H1 structure is from here to here. On dollar it's also bearish, so when price pulls back into whatever POI, we can expect an expansion if we see confirmation. Ideally we're trading with H1 structure, we want to see M15. M15 is here, never broke on the dollar. M15 did break, SMT divergence, and this is a really good lesson actually. So again, it's the same setup as here, the SMT divergence with M5 confirmation, which was your entry here. Oops. But look at this. Dollar structure after the SMT divergence is different, okay? Dollar structure on M15, this low high failed to create a lower low, so this becomes your structure point. So now this is bullish structure. So for H1 to expand to the downside, we need to see M15 break. Our H1 is bearish, our M5 is bearish after this breaker structure, but our M15 is still bullish. So same model as the other video, M5 entry to H1 target, M15 is your obstacle. Hopefully this makes sense. And you can see this M15 obstacle transfers over to EU, which would be in here, and price rejected from here. It's an obstacle in EU as well. So hopefully that makes sense why price sold from here today, because dollar structure was different, therefore that structure will transfer over to EU and act as an obstacle on EU. So after this M5 breaker structure, we have to break this obstacle because dollar has an obstacle. Dollar's M15 structure is still bullish. Yeah, M5 is bearish, but that only means M15 retracement. Potentially M15 could have made a high, and that will transfer to EU. So after the M5 break structure, we have an obstacle to break. Once it breaks on the dollar, for example, M15 is bearish, M5 is bearish, H1 is bearish. Now, essentially, according to multi-time frame analysis, our low is confirmed in a way. So I can hold these buys in here with confidence that we're going to attack this high, if that makes any sense at all. It makes more sense now, great. 9:30 on the 30th, well on SMT with the XY. 9:30 on the 30th. 9:30 on the 30th. 9:30 on the 30th. Oh, my times is different. Shit. Maybe that's 8:30 or 10:30. I don't know. I think I know what you're on about. It'll be yeah, I think it's this one. Yeah, I remember that. UTC, oh, UTC -4. Okay, let me go on this. UTC -4. 9:30. Okay. Okay, yeah, so, okay. Good point. Which is why this was also not a breaker structure, is because dollar failed. Thank you for that. Dollar failed to break structure as well. So obviously S&T divergence is a form of distribution. So yeah, that's why it wasn't a break structure as well. It's another reason. Because dollar never made that break structure. This was just an S&T divergence, which is a stop point. And yeah, good point, good point, good point. And again, the structure changes. So in this example, where are we? The structure will change. So M15 was actually bullish because the structure point still change. Even if it's an inducement, the structure point still change. So this becomes an obstacle in here, but obviously it fucking flew through. But yeah, same logic. But yeah, that's a good point. SMT divergence. This amazing. Thank you. Yeah, I was gonna show POIs and stuff, but like I was a bit iffy about sharing this, but I felt bad because this week's presentation wouldn't have made sense without it. But yeah, hopefully it makes perfect sense. And now essentially, unless we see, you know, M5 breaking down, it should really attack this high. And also, dollar structure is obviously different, so we do have dollar M15 structure to play off of. Failed high low, failed to create a high high, so this is our structure. So dollar can trade up to these levels, and that transfers to EU. So yeah, we do have that. So I'm basically playing off of EU's M5 structure and dollar's M15 structure all day until we break this high or break a structural high on dollar. I'm still going to attack this low right here, but obviously they aren't nice wicks, so I don't know. I don't know about that one, but currently right now I can only say EU will buy. Until I see any distribution, you know, I'm not selling. If we break structure to the downside, then I'll look for sells and target this low, but yeah, that's pretty simple, to be honest. Easy trade this morning, and it's, you understand, like, looking at M5 structure now, this time frame is relevant. It's not getting lost in time frames because we understand where we are in price. We're at our M15 levels, so okay, let's look at M5 for accumulation. If we were, for example, at daily levels, we wouldn't come to M5. It doesn't make sense unless you want. I mean, you can, but in terms of high probability and high win rate, you're going to be looking at H4 and H1 levels at daily. But yeah, the main takeaway was from this was how dollar's structure can transfer over to EU and vice versa if there's an S&T divergence, and how that becomes an obstacle. Because looking at EU structure from this, it doesn't really make sense why price sold from here, But like I said, once you incorporate dollar, it makes perfect sense, and there was a perfect sell in there. And yeah, it's just really, really easy. I just got this from ICT, how he always compares EU with the dollar, and when I saw things like this didn't make sense in price, I was like, why is that happening? And I saw that it was respecting dollar structure and not EU's. So obviously everything stems from ICT. I'm not claiming to have figured this out, but for the people that will start crying about this. So yeah. Then yeah, I will do a live session probably next week in London. But yeah, hopefully watch the video like 4 times and it will make sense. Just look out for SMTs and how structure changes on one pair, so that transfers to the other pair, and it becomes an obstacle for that other pair that didn't have the SMT divergence. So yeah, sometimes it's like plainly obvious that it's an SMT divergence and you don't really have to observe the obstacle, but I think it's still worth observing at that obstacle. Like this morning, for example, yeah, this was equal highs and Asia high and it was a big draw on liquidity, but I still observe this as an obstacle, and there were sells in here that could have played out. Like, you don't know for sure, you never know for sure. So yeah, but yeah, time frames and structures, literally, and dollar is super important. Obviously now you know why. So yeah, it's basically it really. I'm gonna make this one unlisted or whatever that guy said. Thank you for that, by the way. So it's basically private, but it's not private, if that makes sense. And yeah, I might do like videos now and then of going over price action just to like show you examples and shit. But basically you've got pretty much the foundations. I haven't gone over continuation setups or POIs, but yeah, I don't really want to do that because that shit is very good. But this is all you ever need. If you just catch reversals, like this for example, and like this, and like this, at key levels, that is all you need. And yeah, now with the logic I've given you, every single swing point, from here to here to here to here. Obviously I expected price to sell from here, but we never know for sure. Nothing's 100% perfect. It all makes sense, and now these buys make sense as well. And hopefully we'll come for these equal highs, but yeah, we'll see. We will see. Let's see. If you've got any questions, then just, what does point of interest here? It's like PD array, POI is the same. Do you trust dollar or EU more in terms of structure? Currently, they're all the same apart from M15. Obviously, we had that SMT divergence on M15. But if there's no SMT divergence, I will just be playing off M15 structure. I trust M15 structure. Like, I'm going to use M15 structure all the time. It's just when there's an SMT divergence, the rule is, one time frame structure will be different, so I transfer that structure to the other as an obstacle. But I'm still going to be playing off M15 structure on EU. Like, yeah, I always use EU structure, but the only time I, for example, kind of change it is when there's an SMT divergence. For example, I'm going to go over this one more time. SMT divergence, so this becomes an obstacle from the dollar. If we look at the dollar broke this high, EU failed to break the low, therefore dollar structure changed to bullish, failed lower high, failed to create a lower low, so this becomes your structure point. So dollar is bullish, and EU is also bullish, so it doesn't make sense, right? So this bullish structure on dollar transfers to EU. Okay, so hopefully that makes sense, but yeah, I'm still using EU structure as H1, like, yeah. You just got to look at both pairs. It's really important. Point of interest is so like PD array point of interest is like, for example, whatever time frame structure you're working with is, so just PD arrays, right? So if you're bullish, you're going to be looking for that discount PD array. Although I don't even use discount and premium. I don't use that in my trading. It's pretty irrelevant in my opinion. Because you can buy in premium, you can sell in discount. So, like for example, this IOFED, if we're talking about premium and discount, from even like the structure point that I use, discount is here. You're buying in premium essentially. It's still a valid buy. I don't use discount and premium. Obviously, ideally, the best setups will come in discount, but it's nothing that I use. Like, it's not a set in stone rule. Like, I can't buy in premium. Like, I can buy in premium. But yeah. I will send this link into the forum, and then. But that's pretty much everything. I don't know how long this has been. It's been almost an hour. Damn. It doesn't even say the time. Where's the time? Oh, 50 minutes. Jesus Christ. Gotta have that light break soon. Yeah, don't sell off for you. Don't be a bitch. See what happens. But yeah, like I said, watch this video a couple times and it will make sense. It's just, I've gone over two rules regarding different structure. One where there's just one time frame that is different structure, and one where there's multiple. And yeah, when there's multiple, you change all the time frames. When there's just one, obviously there's just one obstacle to break. But yeah, that's pretty much everything. And that combined with just the range and control shit and structure in general will, yeah, it'll be really good to understand structure. So right now my M5 structure is here. You know, we have, by the way, structure points need to be clear and obvious. So lower low, lower high, lower low, lower high, lower low, break structure, high low, high high, high low, high high, high low, high high, and yeah. But also be aware that dollar has M15 structure. So it's within here, essentially. That's what I'm working with. Until a previous lower high and dollar gets broken, I'm still going to be looking for sells. So, yeah, that's pretty much it. Now, I think, wait. So, I don't want to be like that guy, but no one's really spoken about this before, so technically this could be like the Sir Danthel concept. But no, I'm joking. But yeah, nah, for real though, it actually could, but no. Obviously, if ICT ever watches this, thank you ICT. I basically got this from ICT, just a little twist really. And yeah, it really, really helps me, so. But yeah. That's pretty much it, to be honest. Gonna make this private, well, I'm gonna make this unlisted, so. Because I don't want it to get out, but obviously, we know this community is toxic as fuck, and people will have to study this to understand it in order to leak it, but I don't think it will ever get to that point. The other video's only got a couple hundred views, so hopefully it never gets fully leaked, but I'm not really bothered. That's why I'm not really sharing anything else, just in case, because the other shit is way better in my opinion. But yeah, this is enough at least for people not to get. You'll be able to trade like majority of the swing points now. But yeah, I think I'm just dragging this on now, so and I don't really trade during these times between 10 and 12. Well, oops, let me change this back. Between 9 and 11, according to this clock, I don't trade between them times, so. And I can't go to the gym today. Fuck. My car's somewhere, so yeah. But this is not looking pretty. I don't really incorporate these either, which is maybe something I need to look at. Obviously, it's responding off this, so maybe it's just a pullback. Hopefully, I'm hoping, I'm praying and hoping. But yeah, we'll see. I mean, we did take out Asia, which is a pullback zone as well. And let's look at you. So yeah, that was Asia high, and that was Asia low. So look at M5. So yeah, I think that's everything I want to cover. I might start making videos on YouTube and just posting examples, just so you guys can see the repetition and I can go over structure points, because that is the main thing. That's like the hardest thing to observe, is observing your key structure. So yeah, will there be a link to this? Yeah, I'll post a link, don't worry. But yeah, that's basically everything. But I'll explain it in the forum. If I make any more videos, I'll obviously post it there. So yeah, I'm gonna win this now. I remember how to win this, I think. Yeah, you're welcome, guys. Hopefully it helped. If you have any questions, just ask in the thread, and obviously I will do my best to answer. So yeah, anyway, I'm gonna end this now. I'll post a link into the thread. Do I end it on OBS first, or I think it's on YouTube? There we go.